Which one of these is suitable for you? Is it renting a residential property for personal use or buying a residential property using a mortgage bond? In some cases, if the property gets sold, you're gonna be asked to vacate the property. Welcome to BluFinance TV. My name is Ayanda. In this episode, I'll be talking about which one of these is suitable for you. Is it renting a residential property for personal use or buying a residential property using a mortgage bond? Let us first look at the meaning of renting a residential property for a personal use and also the meaning of buying a residential property using a mortgage bond. Renting a residential property means that you are not the owner of the property, but you are using that property as your home and you are paying rental in exchange to the owner of the property. On the other hand, if you decide to buy a property using a mortgage bond, you're going to be the owner of the property, and that property will be used as a security against the bond that you have borrowed from the bank. And you will be paying installment on a monthly basis until you settle the bond, and then you become the owner of the property fully without using that property as a security. That will be up to you to use that property in future as a security if you want to get more loan or more money to do something, or maybe to upgrade the house that they are staying in. Renting a residential property usually happens when someone is relocating to a new area where they do not have a residential home. The only option they have is renting until they buy a new home. There's good and bad about renting. If you are renting, you may be missing out on capital gains because you are not the owner of the property. And secondly, the owner of the property may ask you to leave the property at any time they want you to leave without any valid reason. In some cases, you find that they have found someone who will be paying more than you are paying, and then they decide that you're supposed to leave the property because that person is going to be giving them more money. In some cases, if the property gets sold, you're going to be asked to vacate the property if the new owner of the property is not willing to rent out the property. They just want to use it for personal use. Now, let us look at what is good about renting a residential property. If we are renting, we are not fully responsible for the maintenance of the property. It is the owner who's going to be maintaining the property that we are staying in. And also, if you are renting in some properties, you are not responsible for paying municipal bills. It is the owner who's responsible for those payments. Owning a property comes with good benefits and also responsibilities for the owner. Let us look at what is bad and also what is good about owning a property that you have bought using a mortgage bond. Now let us look at what is bad about owning a property which is funded with a mortgage bond. If you own a property which is funded with a mortgage bond, at the beginning you're going to be paying installment. As you are paying installment, a significant amount of installment will be going towards the interest that you owe to the bank, and then just a small amount which is going to be allocated to the account of your principal loan, which is going to be reducing your principal loan. For example, let us say you are paying 10,000 Rand on a monthly basis. Maybe about 9,000 Rand is going to be used to pay interest that you are owing to the bank, and then the remainder, which is going to be 1,000 Rand, is going to be used to reduce your principal loan. That is one of the things that you should be aware of when we are taking a mortgage bond. As the owner of the property, it is your responsibility to make sure that the property is well maintained. Also, on a monthly basis, you must make sure that municipal bills, water, rates, and electricity are paid. If you don't own a standalone house, you own an apartment, you also have a responsibility to pay levies to the management board of the building. This money is used to maintain the building. And the last thing that everyone is concerned about, it is the repossession of the property if you fail to pay the installment that you have agreed on with your bank or any lending service provider. Always make sure that you put money aside. You are paying that installment on a monthly basis to service your loan. Now let us look at what is good about owning a property which is funded with a mortgage bond. As the owner of the property, you're not going to miss out on capital gains or capital growth when you are selling that property, especially if you have been holding that property for a long period, because we know that mostly properties are appreciating. That means there's a capital growth. And also, as the owner of the property, you have an option of renting it out, and you will be receiving a rent, and that rent you will be using it to actually pay the installment that you are owing to the lending provider or a bank. So investing in property, it is also good, even though there are also bad things about investing in properties. When we started to record this video, we wanted to know which one is suitable for you. Is it renting a residential property for personal use or buying a residential property using a mortgage bond? After looking at all the information that I have shared above, I would say that when you are buying a property using a mortgage bond, the intention is very important, and also make sure that you look at the affordability. The affordability is not only about the installment. You also have to consider the expenses that you're going to be paying on monthly basis and also the maintenance of the property, because buying a property is not only about the installment that you are paying on monthly basis. It is also about the maintenance of the property. You also have to live. That means you still have to buy groceries. You are going to stay in that house, and for you to continue surviving, you will need to buy food, and also you're going to need money maybe to go to work. That means when you are buying a property, do not only look at the affordability, which is installment, look at everything that is around it. Are you going to be able to survive after buying this property? If you are not going to be able to survive after buying that property, that means for you, renting will be an option, because with renting, there are less responsibilities that are going to be yours. Most of the responsibilities are going to be with the landlord who's owning the property. On your side, it's only going to be the rental that you have to pay on monthly basis, and also make sure that you are surviving by buying food for yourself and also buying electricity, and also make sure that on monthly basis you do afford to the bus fare for you to go to work, because not affording these things, it will be pointless for you to buy a house and not afford to live a proper life. Thank you for being with me until the end. Let us meet on our next video.